Hello and welcome everybody, and I'm Steven and I'm a popular investor on eToro. Thank you very much for listening to my video today, and don't forget, please take a moment to like this video, pause this video, like it, and then subscribe to my channel if you haven't done so already to get all of the best updates from myself on the market. So I just want to apologize. Over the last couple of weeks, I have been a little bit quiet, and that is because I was very sick over the last couple of weeks. I was in hospital for about a week and I had an infection. So apologies, I wasn't able to communicate as much as I have been able to over the last couple of years. But I promise you that the communication will continue from now on. I feel a lot better, and I will regularly make sure that I communicate to you as much as I possibly can. So this is an overdue video. In today's video, I'm not going to be doing a weekly update, but what I'm going to be doing is my review of 2022. And I've called it the year of correction, but the dawn of opportunity. Last year, 2021 was a really great year. And I called it the year of growth. We've obviously had a big pullback in the markets this year. Basically, most sectors haven't gone unscathed. There's big drawdowns in both the stock market as well as the crypto markets as well. Even bonds suffered last year. However, when the valuations become much lower, it does bring around lots of opportunities. So that's why I think that although the performance last year was very difficult and that many of you did lose money, that we now have a lot of opportunities in the future for growth. So thank you very much for staying patient with me. I'm going to be going through the rest of my presentation now. So a little bit about me for those who are either new to the copy or are considering copying me. I'm a full-time investor. My eToro username is Bees84. I had a lot of experience previously in a number of different industries as an expat, and I lived around the world in many different countries, such as I'm originally from the UK. I lived in China, Qatar, UAE, Saudi Arabia, Bahrain, Malaysia, and Singapore, and also Korea. So I have experience both in managerial experience in oil and gas, as well as other experience in medical and security healthcare as well. So I also have 15 years investing experience. I have been investing in the markets for most of my adult life. Is something that I have a great passion for. Even when I was working full-time previously in corporate roles, I was always investing, always researching about the markets. And in 2020, I decided to take the leap to become a full-time investor. This year, I also as well managed to complete my CSI level 3 qualification, which was a really good achievement. This gives me some industry qualifications and allows me to be able to broaden my horizons, broadens my knowledge in the securities industry. I also have been investing in crypto since 2016. It's something that I am very passionate about. I spend a lot of time researching about different crypto projects, keeping up to date with the latest news, looking at charts, really am engulfed in the whole industry. I originally heard about Bitcoin in about 2011. And I was quite curious, and I read a lot of information about Bitcoin, but it took me really till 2016 to truly, really understand the power that crypto will have in the future. And I'm really glad that I spent a lot of time, many hours, getting as much information as possible as I could about crypto broaden my knowledge. I also have a lot of skin in the game, so that's nothing that you need to worry about. I have a lot of money on eToro, more than is required for the elite popular investor level. I could also be promoted to the elite pro level and also have enough money to not have to add funds at any point. So I have a lot of skin in the game. But to be honest with you, I'm much am more concerned about making profits for my copiers. I think it's very important for the future. I understand that most of my copiers are regular people with regular jobs, and they work very hard for their money. So it is my job really to not only protect their money, but also to help grow it. So I place a lot of concern on my copiers' futures. I'm a multi-asset strategy investor. That means I invest in all different types of assets, from stocks to crypto to forex to commodities, just to name a few. And I usually trade macro ideas. So I usually have a thesis that I want to play out for the year. I look at lots of data. I look at news. I look what's happening in the economy. And then I make my investments accordingly. I also do both long-term and short-term trades. I'd say the majority of my investments are long-term trades based on a macroeconomic thesis and ideas. However, I do a lot of short-term trades as well. And I do the short-term trades for a number of different reasons. One of the big reasons why I do these short-term trades with just a small portion of our portfolio is I find that it's a good way to reduce the volatility, because I can go both long and short in very kind of short to medium term time horizons. I'm also able to book in some profits regularly on a daily basis as well. So this kind of mix of long-term and short-term assets kind of really helps me in the long run. And you'll see from the history of my trades, I have done a lot of trades in 2022. I'm also willing to hedge when the market calls for it. I could have hedged more last year. I instead tried to do more of these kind of short-term trades. But if I really feel like the market is deteriorating or it's getting very frothy, then sometimes I do play some short trades on the NASDAQ, SQQ, or some other instruments that are out there for shorting the market. I also look for not only growth, but asset protection. I achieved very good results in 2020 and 2021 with a lot of growth. I tried to protect our assets as well as I could last year. I did make some mistakes along the way. Of course, you can always look back and you can think, with hindsight, could I have shorted the markets more? Could I have gone more into cash, for example? But I think that considering the growth potential of our portfolio, I think, and what actually makes up our portfolio, I think that we did pretty okay if we compare that to the benchmark. And I have got a lot of crypto in my portfolio, which suffered considerably last year. So although it wasn't a great result, I feel like it could have been a lot worse considering the market that actually occurred. So I won't go into too much detail here because I've touched upon it, but my investing style, I trade generally on macroeconomic ideas based on core themes, on what's happening in the economy. I do a lot of fundamental analysis as well. I look at due diligence, I look at annual reports, I look at the numbers, I check out TV and media, I try to find undervalued companies as much I can, or those with higher growth prospects. So I'm constantly looking at the market. I have a lot of research tools that I use in order to get that fundamental analysis. As I mentioned, I do short-term trades as well, and I do a mixture of technical analysis, and also I look at the macro picture as well as crypto. I look at on-chain metrics as well, which help guide me on entry and exit prices. So I have just under actually $3 million worth of assets under management. That's come down from last year, where I was about 5.5 million. Which is understandable considering the market drew down quite significantly last year. And I understand that some copiers may have got scared when the markets went down, or may have pulled out their money because they need it for their everyday lives. So I do hope to increase that number again over time. And I have just over 1,300 copiers from all over the world. These people I speak to very regularly, all the time. I'm always answering their questions. I'm getting to know them. I'm really trying to build a really unique community where I try to help out as much as possible and to really benefit their lives. So just a little bit of resources about where you can reach out to me. So obviously eToro, my profile is Bees84. I also have my own website, which is www.stevenbudgen.com, where you can find out a lot of information. I need to update that, but it's a good place where you can find out a lot of information about me as an investor. I also have this YouTube channel, The Approachable Investor, in which I regularly put out weekly videos about what's happening in the market, more about our strategy, as well as once a quarter as well. I also do a popular investor forum with some of the top popular investors from around the world. So check out those episodes. We have one coming up quite soon. I also have a Discord channel, which is extremely useful. And within that Discord channel, I have hundreds of members where we're regularly talking about the market, some of the key news that's happening. I'm always on hand to answer any questions. Almost every day we're having discussions in that group. So if you're a copier and you haven't done so already, please sign up to my Discord. And if you're thinking about copying, it's a good opportunity to speak to like-minded individuals in the community by joining that Discord group. I also have a Twitter account at Proof of Steve, in which I occasionally put out some market insights and information charts. I'm quite crypto focused on Twitter because I follow what's happening in the market through Twitter. Also, I have an email address if you ever need to reach out to me personally. I have my email address is at investing@stevenbudgen.com. So lots of ways you can reach out to me. So on to those results from last year. And as I said, they don't read that pretty to look at from afar. We were down about 37.32% from the previous year. And if we look at some of the 2022 benchmarks, the Nasdaq was down about 33.1%. The S&P 500 was down about 19.4%. But if we look at other things as well, like Bitcoin and other altcoins, Bitcoin was down over 65% in 2022. And some of the altcoins were down between 90 and 95. Considering we had quite a high portion of crypto in our portfolio, I think that if we combine those and we look at the upside potential of my portfolio, look what happened in 2020, look what happened in 2021, and look what's happening so far in 2023. It can happen that you can have a bad year. And if we look at my total eToro total return, it's about 195% since I joined eToro in 2017. And the total annualized return is at about 25%. That might not be exactly accurate. We will see on my next time that they update my fact sheet, which all that information is on, but it is very close to those figures. If we look at my asset class exposure, my asset class exposure, so stocks is at about 57%. My crypto exposure right now is at about 21%. ETFs is at 16.79%. And currencies is at 1.77%. Commodities is at 1.76%. And indices are about 1.72%. However, some of those things such as commodities, currencies, some of them I dip in and out of in terms of short-term trades. So it doesn't paint an overall picture, but my highest asset class is stocks in a number of different geographical regions, as well as different sectors as well, which I will go through now. If we look at my portfolio sector breakdown, this is taken from bullsheet.me. The highest portion that I have is crypto. And then if we look at my stocks breakdown, then the highest is consumer cyclical. Technology falls after that, as well as then financial services, industrials, consumer defensive, basic materials, real estate, energy, healthcare, etc. So I have a real mix and quite a lot of diversification in our portfolio. And what that doesn't take into account as well is the different geographical regions that make up my portfolio as well. So I think I have quite a well-rounded portfolio of stocks. You can also see to the right that although my focus is not really on dividends, I don't have a dividend only strategy. However, some of my stocks do generate a nice dividend. If you look at my risk score, I would say for this year, because the markets have been very volatile. So 2021, I'd say my risk score was most of the time between, I'd say 4 at the lowest and 6 at the highest, but it probably spent most of the year around 5. This year, I've been going from 5 to 6 on certain months. I think I spent majority of the year on 5, but there's a couple of months that it's spiked up to 6, and that's because the market has been very volatile. My portfolio isn't that much different to 2020, 2021, although I did cut some of my crypto exposure at the top of the last bull market. I'd say the levels are between 5 and 6 at the moment. But if the volatility does reduce, it could be a 4 or 5 again next year. So in terms of the risk score, I'd probably expect somewhere between 4 and 6 this year, depending on the market environment. So I would say that I'm not a low risk investor. As you can see from my results, I have some swings in my results. For example, 2020, 2021, I had very high results. And then last year we had a bit of a drawdown. However, I'd say I'm probably on the medium to lower high end of risk. And that's why I produce really strong results. So just wanted to go over some of the big issues that happened in 2022. There was the war in Ukraine. which really caused havoc for international brands operating in Russia. Obviously, there were sanctions placed, and there was a lot of political tension between Russia, not only Russia and Ukraine, but also the Western allies as well. And there was a lot of embargoes on oil and natural gas, especially in Europe, because they were getting a lot of dependency on Russian oil and natural gas, and also wheat as well. And this caused some of these commodities to surge, which had a really upward pressure on inflation. So the second point as well, what happened in 2022 was inflation and interest rate rises. Obviously, 2020, 2021, there was a lot of money put into the system in order to be able to provide stimulus for people during COVID-19. And this caused a lot of inflation issues, as well as supply chain issues as well, which happened because of COVID in China, etc. And this caused a lot of inflation. So we saw inflation peak up to about 9.1% in June. It's come down somewhat since then, but it's still at a very high level. And this really forced the Federal Reserve to increase their interest rates, and in order to try to cause demand destruction. And then what we have seen is we've seen a kind of a lagging effect on that demand destruction, but that inflation is now starting to come down. The Fed's target is 2%. I don't think it's likely that they get there, but I think over 2023, as those interest rates continue to rise somewhat, and then they hold still where they are, then I think that it should have a downward pressure on inflation and should get closer to their target, if not reach it. We have seen energy prices as well have started to come down, which has helped inflation. Also, if we look at energy costs skyrocketed in 2022. Mainly because of the war in Ukraine and the demand that came back after COVID-19 as things started to open up again. And we actually saw oil reach $120 a barrel in June 2022. And this, as I mentioned, was caused by Ukraine and the embargoes with Russia, and then the opening up and demand for goods and services after COVID. We have seen, as demand destruction has taken place, we have seen some lowering of those energy costs, but they are still on at a historically high level. We also saw strict China COVID regulations, and I was actually expecting those to come off a lot earlier in 2022. But China government, they held a policy where they had a strict kind of COVID zero policy. They were doing regular testing. They were doing kind of lockdowns in cities and a lot of isolation. And this kind of paid a lot of havoc on the economy. It slowed growth down a lot. It caused factories to close down during certain periods as well, which had an effect on the supply chain. So this had a big effect on not only the China economy, but also the rest of the world economy in 2022. However, they have recently started to drop this strict COVID policy. And I'm hoping that in 2023 should be a much better environment for Chinese stocks in particular. These are some of the major concerns in 2023 looking forward. As I said, inflation is coming down, and they have put a number of different interest rate rises throughout the whole of 2022. It is expected that there might be 1 to 2 more smaller interest rate rises at the beginning of 2023. Then it is expected that they will pause those interest rate rises. There's a lot of analysts out there and people that specialize in the economy that also think that there's a good chance of there being a pivot, and the fact that people will lose their jobs, there could be unemployment, etc., and that it will be quite important that they then start to do quantitative easing again, and this could have some pressure again on inflation, but they may be forced to do that. There's also slowing economic growth. For example, consumers now have less money to spend, their interest rates have gone up, their mortgages have gone up, and the energy accommodation costs are also very high. So we could see some slowing economic growth in 2023. Another concern or risk is unemployment. Actually, unemployment in 2022 was at quite a very low historic level as things opened up after COVID-19. But with interest rates rising and potentially company earnings suffering, there could be higher unemployment on the cards in 2023, which could have an effect on the economy. And lastly, there could be an earnings dip, obviously with the issues with inflation, high costs, supply chain, staff costs have gone up, customer financial conditions. We may start to see in the upcoming earnings reports, we may see some dip in terms of revenue, gross profit, EBITDA, etc. So something to keep an eye on. So some of the highlights of our portfolio in 2022. One of the highlights of our portfolio was oil stocks that we had in our portfolio. Oil stocks were one of the only sectors that actually rose quite rapidly last year, which I've explained the reasons why. We had some success with Chevron in our portfolio, in which we made very, very good profit from that position, as well as Flowserve, which we currently have in our portfolio, which has continued to do modestly well. We also, at the beginning of 2022, I decided to add some financial services and insurance companies into our portfolio. And the reason I did that is because not only did I anticipate, but they were also talking about it quite regularly, that they plan to increase those interest rates because of inflation. So I added Hartford Financial and Cigna into our portfolio, and I managed to close them out towards the end of 2022, also at a very good profit. So that was one of my macro investment ideas. I also had some success in value stocks. At the beginning of 2022, I looked at it, and value stocks were quite undervalued compared to growth stocks after what happened in 2020, 2021, when growth stocks rapidly appreciated in price. So I had some success in some value stocks, which I managed to close in Hormel, GPI, Plus 100, GSK, a few other value stocks in our portfolio. I also had a lot of success in commodities last year, and I did a lot of short-term trades. I think my most popular one was natural gas. Anyone that's following me closely will know that I am regularly trading natural gas. I find it a very good commodity to trade. It's very volatile. It kind of works in patterns. I can get a lot of information about weather cycles, as well as other things that might affect the natural gas prices. And I also do a lot of technical analysis. I also did a lot of trades in oil, sugar, carbon emissions, nickel. And really my aim is to take kind of very regular small profits somewhere between 2 to 5%, sometimes up to 10%, depending on the commodity and the volatility. But I look for about 95% success rate. Occasionally have one that fails, but I think I more than make up with that with the winning trades that I have. I also do a lot of Forex. The reason why I do Forex is because often it is not super correlated to the rest of my portfolio. I also do a lot of short-term trades there. My most successful and the most top trading pair of last year was US dollar and against the Swiss franc, as well as the US dollar against the Swedish krona. Those were the main currency pairs that I traded last year. Okay, so some of the lowlights of 2022, as I mentioned, crypto extremely difficult last year. Bitcoin at one point was down about 78% from its all-time high in November 2021. What I did in November 2021 is I did take a lot of profits at the top. So I was regularly trimming the crypto positions during the bull market. And so although we still had quite a lot of crypto in our portfolio, the drawdowns were less than other portfolios which have a higher percentage of crypto because I managed to trim those positions beforehand. So that's very important. And then I've kind of I see a lot of asymmetric opportunities when the markets, especially the crypto markets, are down significantly, and that is where I like to increase that exposure again, which I have been doing over the last few months. Also, tech stocks performed really badly. I did trim quite a lot of tech stocks last year, and I did have some successes on a shorter term basis with tech stocks, but notably Wix, Everbridge and Magnite, which is an advertising company, did suffer last year, but I managed to keep my exposure down to a reasonable level. Gold, silver, and also gold and silver miners didn't perform very well last year. They tend to perform a lot better when the Fed is in QE mode and they are printing money like we saw in 2020. So it didn't perform. They didn't perform so well, but I can see a lot of tailwinds coming into 2023 that should help gold, silver, and also the miners. And we've actually seen that over the last couple of weeks play out as gold and silver has increased in value. China stocks was also a big negative last year. As I mentioned earlier, I did expect the reopening after COVID to happen a lot earlier on in the year, but they kept a very strict policy, and we did have some kind of pandemic sensitive plays in our China stocks. So we had Wynn Macau, which is a casino based in Macau. They obviously had a lot of issues because Chinese mainland people couldn't visit Macau without isolating, so they had a big dip in revenue, etc. Also, Haidilao, which is a Chinese hot pot restaurant, also had a similar issue where customers couldn't come and visit the hot pot restaurant as often as we would have liked to, because they were often in lockdowns, isolation, and there were a lot of policies in place. So again, I can see a lot of new opportunities in Chinese stocks, especially now that they've lifted those COVID restrictions. And I think there's going to be a lot of pent-up demand. So I'm expecting Chinese stocks to do really well in 2023. Pharma was also a very difficult sector as well. Often a lot of the drug companies are very speculative. A lot depends on the clinical trials. Funding kind of dried up a lot as well in pharma last year. So some of our stocks such as Bluebird, Corvus and Bulge Health didn't perform very well in the year. I've actually cut Corvus since then, but we still hold Bluebird and Bulge Health in our portfolio. And I'm much more optimistic about 2023 than I was 2022, and they are at pretty good valuations now. So a bit about Bitcoin and crypto. I wanted to talk about some of the events which kind of caused that crash that happened in the markets last year. So it was kind of made up for a number of different reasons. So one of them was just generally the macro economy and those interest rate rises that I was talking about from the Fed. This has effect on lots of things, liquidity in the market. And also there was reduced crypto volumes as well. So the volumes on exchange reduced pretty significantly. A lot of people, they needed money, and they, especially kind of hedge funds, etc., they look to the kind of risk on assets to try to cut some of those assets in order to protect some of the customers' funds, etc. There was also a lot of regulatory scrutiny as well on the industry as a whole, and this kind of all caused downward pressure on in crypto prices. We also had some major events that happened. So one of the major events that happened in June 2022 was the Luna debacle, or the Luna death spiral. I think you're all pretty aware of what happened there, but basically Luna's stablecoin UST, it depegged, and what happened from there is that there was a death spiral because of the mechanism between Luna and UST. Every time people were selling the UST, that it printed more Luna, and then it severely diluted and formed this death spiral, and many people lost a lot of money in Luna. And not only did Luna basically go almost down to zero, also it caused a lot of distress in the market. It caused a lot of people, a lot of big, hedge funds to have to liquidate, caused a lot of pressure on crypto related businesses, and of course on the crypto on the crypto market share as well. So yes, that was a very tough event that happened that caused a severe downturn in the market. We also saw the Three Arrows Capital blow up, which happened after the Luna crash. Three Arrows was one of the largest funds in crypto. They're invested in a lot of projects. And basically what happened is when the price dipped significantly during Luna, they got liquidated on a lot of their positions, and it kind of caused this big unraveling in the market. Lastly, which happened a bit more recently, was the FTX crash. So FTX was the second biggest, largest crypto exchange in the industry, ran by Sam Bankman-Fried. And what happened there was FTX they released the kind of balance sheet, which showed that they had a lot of their assets in their own token, FTT, and other coins that they were involved in, such as Serum, Solana, a few others. And then this caused a big run on the bank after a lot of media news. And then they had to pause withdrawals, FTX, because they couldn't meet the liquidity demands of everybody wanting to pull out their money. It's since been known that there's a very high likelihood, I have to say alleged at this point, that FTX was just one big fraud, one big Ponzi scheme, and Sam Bankman-Fried is currently in custody in the Bahamas, and is quite likely to go to jail in the US for a long period of time, along with the CEO of Alameda, who FTX were lending a huge amount of money to Alameda and were, putting no restrictions on Alameda, which is a trading company which is owned by FTX. So this caused another big dent in the market later on in the year, and kind of caused Bitcoin to kind of double bottom. We've since gone back over the price Bitcoin was before FTX crash. So we're starting to see some early signs of a crypto spring and some improvements in the crypto market. But other contagion effects that happened throughout the year, Voyager, BlockFi, which a lot of those came out of the FTX situation. So there's been a lot of struggles by crypto companies this year. But it happens after these bull markets where the market gets very, very frothy. Yeah. And then crypto companies start to take more risks. They start to use more leverage. And then when the price comes down, this is when they need to pay the piper. And this is when they start to get into financial difficulties. And really, it's like a domino effect. Once some of the really large companies start to have financial issues, this kind of cascades down into other crypto companies. So it's not completely out of the way now, but things are improving over time. And I think sometimes it's needed to kind of cleanse the industry, although it's very painful at the time. So I wanted to talk about some of the focus areas for 2023. So again, I'm going to continue with the theme of crypto. And what I'm actually expecting in 2023, because of the way that the 4-year Bitcoin cycle occurs, I'm expecting 2023 to go into a much wider, kind of higher range in 2023. And this could go up and down, but I expect, and my base case is that we have already bottomed in crypto. Might not 100% be the case, and we may test those lows again. But at this stage, I think it's unlikely. The longer we are out from the FTX collapse, the less likely I think it's going to happen. And I expect some of the macro conditions to improve as well. So we could, what I think is kind of as a base case, I think it's quite likely that Bitcoin will spend this year kind of between 20 to 40,000. I think it's very unlikely that we will hit an all-time high again in 2023. But if we look at that range, there is the potential for kind of a times 2 times 3 upside, which is pretty significant, especially as we build our positions. Some of the altcoins could be more as well, but obviously there is more risk. So there is some good upside in crypto positions, and I have been adding them during the bear market. And for example, in November, December, I was adding crypto positions because I saw an asymmetric trade. I don't think that, if any, there's much more downside to play out, but the upside potential over the next couple of years could be huge. So it's a good time to add to the positions. Also, I expect the China reopening. As I said, the restrictions are starting to come down. I've recently added to some of our COVID-19 sensitive stocks. As I said earlier, Haidilao, Win Macau, the Fosun Group. I also have Alibaba and JD.com as well in our portfolio. And I actually think this year Chinese stocks are quite likely to outperform US counterparts. One, because they are better valued than some of the US stocks. Also, China is loosening the monetary policy, whereas there's a lot of quantitative tightening in the US happening at the moment. So I think we have some good positioning there for Chinese stocks. Also have some stocks in our portfolio which suffered last year because of inflationary pressures. The prices of commodities went up, which made it quite difficult for some companies. And also staff costs went up, etc. And it took them a while for them to be able to take those prices back to the customer and try to absorb some of those extra expenses that they were having. So I'm expecting some of our stocks such as Stanley Black & Decker to do a lot better this year and have a good recovery, as well as Nomad Foods and a few others, which are my kind of core positions. Gold, silver and miners, as I said, I'm expecting them to do a lot better this year. There is a potential after the interest rate rises that there could be a pivot back to QE. Mining stocks as well, especially cheap at the moment, as mining is quite cyclical. And when the prices of gold and silver are lower, it causes less mining activity. And then as the demand for metals increases, then it will cause them to slowly start to mine more when the prices increase. So I'm quite positive about gold, silver and miners. Also energy, I have a lot of alternative energy in our portfolio. So I have a ETF called Ura, which is uranium mining. Anyone who follows me closely will know I'm quite bullish on uranium mining over the next kind of couple of years, and that's a significant position in our portfolio. We also have some solar power as well as hydrogen power stocks as well within our portfolio as well. So energy is going to be a key component. I haven't gone too mad on tech stocks this year, and we have a moderate amount of tech stocks in our portfolio. I did trim those significantly in 2022. However, we do have Amazon, Apple, Everbridge, a few others in our portfolio, which I think have strong moats and good balance sheets and good future growth potential. So over to our core crypto positions. As I said, I still think that there's a good asymmetric reward. If you look at the chart to the right, you'll see some of the drawdowns in a lot of the major crypto coins. As you said, some of the ranging from minus 52% down to minus 99%. However, I just wanted to run over a bit about my core crypto positions and why I'm invested in them. So first of all, Bitcoin will always be my highest conviction crypto play. And that is because I see it as being a great store of value with a finite supply and a lot of strong reputation in the industry. So and also there's a lot of developments that are happening. We saw what happened with El Salvador as they took on Bitcoin as currency. There's been a lot of development as well with the Lightning Network this year. If we look at on-chain metrics as well, we'll see that a lot of Bitcoin hasn't moved even during the big price dips in 2022. So people are clearly using it as a store of value. And although Bitcoin did have a bad year this year, it's not uncommon, and the pattern of Bitcoin over its kind of 12-13 year life is that 1 year every 4 years it has experienced a drawdown as things get very frothy during the bull market and prices start to get ahead of themselves before that kind of pullback. So still very confident in Bitcoin, and I will obviously keep that position. Ethereum as well is one of my second largest crypto position. Ethereum, I'm also very bullish on as well. They have some of the smartest developers in the world, and they have the most activity on chain, smart contracts, as well as the largest chain for NFTs, prediction markets, gaming, lots of different stuff as well. So they also had a technical fork as well this year, which moved it to proof of stake. So there's no more mining, and also Ethereum became disinflationary as well, which is going to be good as well, I think, for the price moving forward. I also have BNB in my portfolio. Binance is by far the largest exchange right now. There's a lot of incentives to use BNB in terms of trading. You get discount on your trading fees, as well as the Binance Smart Chain is one of the largest chains out there, and there's a lot of activity. There's a lot of funding as well from Binance for developers to start to use the Binance chain as well. BNB always draws down in the bear market a lot less than a lot of the other cryptos, and I think that is because a lot of the use cases that BNB has, counts as well in the bear market. So I'm very bullish as well on BNB. I'm also very bullish on Hedera Hashgraph, or HBAR as it's known. I've increased my Hedera Hashgraph to become one of my largest crypto positions in 2023. It's already done very well in January so far. And I really like Hedera Hashgraph because it has really unique partnerships, really strong marketing, transactions per second, and I really think it's going to have a really great future. So I wanted to make sure that I had enough Hedera Hashgraph in our portfolio. I also have some positions in Solana. Solana was a big winner for me in the last bull market. It has had some issues though with the FTX debacle, because there is a lot of links between Sam Bankman-Fried and Solana, and Alameda did own Solana in their balance sheet, which obviously is a risk. However, there's a lot of smart developers on Solana. It's one of the fastest blockchains out there. And although sometimes it does have some downtime periods, I think that they have a lot of future potential because of the speed. Also, the transaction fees are extremely low as well, and there's a lot of developers developing on Solana. So I still see a good future, although the price has drawn down significantly in 2022. I recently just sold a little bit of our Solana position, but I plan to increase that if it does come down below those levels that I sold some at. I still hold some in our portfolio. Also, Polkadot, we have a good amount of Polkadot in our portfolio. They have had quite a lot of success with the parachains and the parachain auctions, which means that you have to lock up quite a lot of Polkadot in order to kind of launch these for the parachains. And I think Gavin Wood, who's basically the founder of Polkadot, he's extremely technical, and he has a very good vision overall for Polkadot and the Polkadot Foundation. And I think that it has a very strong future. So we will keep some Polkadot in our portfolio. And lastly, which I think is going to be a big winner in 2023, is GameFi, which is basically crypto gaming. And what I've done here is I've gone for one of the game workshops instead of an individual game, and that is because Gala Games has a lot of different games that have been developed and are in development at the moment, and it only really takes one blockbuster game in order for the token price to really take off. And it's much better to invest in a games workshop such as Gala Games than an individual game, because you're not quite 100% sure which game is actually going to take off. but you trust in the team and the developers, etc., that they will produce good games and good token economics. But I think it's very important for GameFi that the gaming aspect is put at the forefront, and that there is either a play to earn or there is a tokenomics aspect to the game, which has utility. But I think the most important is the game, and making it fun and interesting. You really need a breakout game for GameFi to really take off. So now we look at the Bitcoin cycle charts. And what I really wanted to just go over in this chart is the Bitcoin halving cycle. Next Bitcoin halving cycle is likely to happen in 2024, around about May 2024. And what usually happens is you usually hit a cycle top when everything gets really frothy. So for example, November 2021. As well as what happened in December 2017 as well. And then what happens after that, you usually have about a year to 14, 15 months of finding a bottom in the market, big drawdowns, finding a bottom in the markets, 80% drawdowns, for example, in Bitcoin. And then what happens is once you find that bottom, then you usually hit this new wider range, which I'm expecting kind of to be around 20 to 40,000, fluctuating throughout the year. And this is what I call kind of crypto spring. A lot of the useless companies and useless cryptocurrencies are kind of flushed out the market. They die. The bad actors are gone. The sellers or people there were just speculating that, just wanted to make money, but weren't that interested in the future of crypto. They've all left the market. So we left with this kind of core hodlers and people that are very interested in the technology. And what you usually see is this kind of rise up, which is kind of crypto spring. And then you find a new range. And then in 2024, around May, you'll see the halving, and what this will do then will have a pressure on the supply squeeze, I should say. And then what happens from there is that as miners mine Bitcoin, they get less reward. So it means that there's less selling pressure from miners. And, as demand continues to increase, then you start to see this kind of bull cycle that will take place, which I'm kind of expecting in 2024, 2025 for those significant gains. However, crypto spring, as I mentioned, 2023, I still think that we can get significant upside on our crypto positions. So I just wanted to go over some charts in the economy snapshot and tell you a little bit about what happened in 2022 by charts. So 2022 was the worst year for bonds and the 7th worst for stocks. So it was actually quite surprising for bonds, because usually when the markets, stock markets go down, you usually see bonds perform quite well, because people, flight to safety, want a less risky asset to work with. But it wasn't the case for 2022. So it was the worst year for bonds, and one of the worst years, and definitely the worst year since 2000 and that 2018 2019 crash for the stock market. So as I mentioned, not many asset classes escaped losing money in 2022. And as you can see, 105 out of 112 asset classes lost money in 2022. So there wasn't many places to hide outside of kind of commodities and a few other niche areas. So I also wanted to go over the historic returns after the last Fed hike. And what I mean there is if we look at back in history, when the Fed stop to increase interest rates, and there's that kind of very last hike, I wanted to look at a chart that kind of measured that. So if we look at the average US stock and bond performance 12 months following the last, so that's the last increment hike of interest rates from the Fed, stocks have in history gone up 19.9% and bonds have gone up 11.5%. So if we kind of follow history and we follow kind of the average, it is expected that after that last interest rate hike, which could be early next year, could be in February, could be in March, April, that we could see some upside in the market again, but we have to be very careful there. If we look at inflation for 2022, as I mentioned, it hit peak inflation at about over 9%. And that is because of a number of different reasons. As I said, the free money effect in 2021, the easy Fed, the loose monetary policy, earnings booms, there were record margins, there was mania, there was meme stocks, there was all sorts of stuff, record housing appreciation, so the prices of housing were going up. And that's kind of been the polar opposite in 2022. And we've seen that effect of money wear off. We've seen Fed tightening, we've seen volatility, drawdowns, stagflation is potentially a risk. The housing market started to slow down. So there is a number of things that have been kind of the polar opposite in 2022, and those interest rates hikes have put a lot of pressure on the market and have taken out a lot of frothy valuations. I also just wanted to go over the value versus growth, and I actually did a very similar chart in my presentation last year. And in my presentation last year, you would see that growth was vastly overvalued. Growth stocks are vastly overvalued compared to their value counterparts, and they still are, but they have come down significantly as a lot of that froth has come out of that market, and they're starting to get closer to kind of meeting in the middle there. So although I think it's probably a little bit early to go in heavy into growth stocks, they are starting to be better valuations, but I still think it's possible to get better valuations within the next couple of months during once they're implementing those interest rate hikes. There could be a lot of opportunities towards the middle and towards the end of 2023 for growth stocks. So I may position towards the end of the year, I may increase my growth stocks when I feel like there's less risks, and value stocks have kind of they've gone down slightly and started to rise up again recently, but they're at better valuations than growth stocks. Also just wanted to look at the S&P 500 valuation. If we compare that to the kind of 10-year PE ratio, you'll see that it's a lot cheaper than it was during the frothy times in 2021. And those valuations have gone down quite significantly, and kind of now down to very close to those kind of COVID, the center of those COVID times in 2020, before all the money printing. So it's starting to become slightly more reasonably priced. So now if we look at US inflation rate versus the unemployment rate, as I mentioned, inflation peaked to over 9%, now coming down significantly, but still has quite a long way to go to meet that 2% Fed target. but there is a lagging effect in interest rates before kind of that demand destruction is seen in the economy. And as I mentioned, there was that big peak up in US unemployment rate during the start of COVID. Lots of people lost their jobs. Trade and commerce basically ground to a halt. But since then, as the economy started to open up again, unemployment has actually gone down to kind of really historic low levels. And that is starting to increase slightly. So what am I expecting is that kind of inflation rate to come down and that unemployment rate to increase, and they're going to come a lot closer to each other during 2023. As I said, we also see China slow down, but with the reopening on the horizon. So you can see that real GDP growth has been very small for China's standards. China over the last kind of 20 years has had very high growth rates, GDP growth rates. That started to come down as the economy's basically been severely hampered because of the COVID restrictions in 2022. And then you can also see that retail sales has started to go down as well, and went down in 2022. However, I see this type of chart, although it's very important to see the context of it. And as you know, China was locked down for significant parts of the year, and there was severe restrictions. So there could be a lot of demand going forward for goods, services in China. And there could be some improvements in the supply chain sector as well, where manufacturers are more able to keep their factories open and to be able to supply stuff around the world. So yeah, I'm expecting a very strong Chinese market this year. So I just wanted to talk a bit about those interest rate rises and how much higher will the Fed raise interest rates. You'll see that in December, they have raised the rates by another 50 basis points hike, bringing the interest rate now to 4.25 to 4.5. And it is actually expected that there could be 1 to 2 more interest rate hikes at the beginning of 2023. Then it is expected that they will, the markets are actually expecting through the federal funds rate that what will happen is the interest rates will then start to go down and they'll go into QE mode. And they're actually anticipating that by January 2025, those Fed fund rates will have gone down to 2.94. So what goes up must come down. Just some important copy information for you if you are copying my portfolio. Just to let you know that I will not add funds. I have enough skin in the game to cover even the highest levels of the Popular Investor Program. I don't see the benefit of adding funds. It only will bring many of my copiers out of synchronization, and it would also force them to add funds when you can choose to add funds if you think that there's good opportunities in the market and valuations are at a good level. You can add funds, or as you have some spare cash from your job or from a bonus or whatever it might be, you can then add funds into our portfolio. Also, to let you know that our minimum copy size is still about 850. I do plan to reduce that over time, but I still have quite a lot of smaller positions in our portfolio. And my aim is really to kind of reduce that towards the back end of the year. If you can't afford to copy with $850, then what I would suggest is that if you copied with over 500, you might not copy some of the very small positions, but you'd get the majority of the much larger positions. So it's still an option, but please note that there will be some desynchronization if you copy with less than 850. Number of positions, I am slowly reducing the number of positions in our portfolio. I do think it's very important to have diversification in your portfolio, but I also think it's important that that you don't dilute some of the upside potential that you have by having too many stocks from too many sectors in too many geographical regions. So I'm getting much closer to a comfortable enough positions for our portfolio to have reasonable diversification, but have a lot of upside potential. So thank you very much for listening to this video. If you haven't joined my Discord group already, please do so. And I really look forward to a really fruitful 2023 and beyond with you all. Thanks for your patience during 2022. I think it's very important that sometimes you go through some of these hard times and it can sometimes act as a kind of learning exercise as well, that markets don't only just go up, that they go down as well in certain years, but over the long run, that the markets tend to go up in value over the long term if you hold your investments and you stay patient over multiple years. So thank you very much and have a great week ahead.